All right, what's up? Tim Sykes here. I'm going to upload two video lessons just so that you can see how I'm trading like extra cautiously right now, but still profiting. And then also we have a great new challenge student, six-figure student, Andrew, Androo, in the challenge chat. You know, he posts a lot. And he just made a video lesson on his dip buy on some of the banks. So, you know, I think it's good to see both strategies. Understand, I don't trade in an exciting way these days. I'm trading with a small account with small dollar positions, safety freaking first. The more that I, teach, the more I want people to realize that you can do this in a relatively low stress way. It's not just about how much money you can make and like bet it all and have all this adrenaline. I see that more and more people are having problems just taking small profits, and they're getting confused with, higher risk, higher stress, bigger account strategies. And I really want to differentiate between the two. So if at any point in this video or in Andrew's video you understand, say, I promise to be safe, because this is my main priority. So many traders are not being safe right now. They're not prioritizing safety, and I think that's a big problem. In this kind of slower market, it's really good to fine-tune your strategy and fine-tune your risk levels, especially when you're just beginning. No one is making like huge 2020, 2021 type profits right now. So understanding that, like, there are opportunities, but I think the best opportunity and the best way to capitalize on the current market is to really trade small and safe and realize that there are ways to do this. Even when you're day trading, even when you're trading penny stocks, you don't have to take big risks. So that's my little spiel. These are my last two trades. Nothing big at all, but bigger profits than losses. And most importantly, I stayed safe. And I could have, probably done better on GTII. But again, I want you learning that it's not about perfection. It's about safety first, because some people, are getting crushed. And just to show you the other side, SBNY is still halted. It's probably going to be worthless when it reopens, if it ever reopens. This thing was fading. This is a giant multi-billion-dollar bank. And I saw a lot of traders saying, wow, it's falling off a cliff. This is max panic from, the 150s down to the 70s. So you have a 50% dip in a few days. If you look out over 1 year, it's way down and it looks like a good dip buy. Right here, look at this. It had a very similar drop from 260 down to 180 and a nice little bounce here. This is a nice little 20-25% bounce. The difference here is that it's not bouncing. It never will bounce. The company's out of business. That's SBNY. This is the one that the regulator shut down over the weekend, which was actually a little bit of a surprise. SIVB, same kind of thing, where, look at this, down from 280, and I don't know why, this shows 100. Never, it didn't close at 100. It closed at around 40. And some people were dip buying this, 180 down to the 40s. I saw some people being like, I like the CEO, I like the business, this is a deal. And then it went completely bust. And I think they got taken over for what? $1 a share. When you're dip buying these banks, and not all banks collapse, right? FRC had the big dip and now it's bouncing. Like, you can double your money off the bounce. So not all banks are failing, but the risk is that you don't know which ones are going to fail and which ones aren't. And obviously SIVB happened, what time did they shut it down? This was pre-market around 8:30 a.m. when it was halted, and then, it'll never reopen. SBNY, finished the day out on Friday. Can you imagine dip buying this, being like, oh, look at this. It's dropped from the 90s down to the 60s, nice bounce, and here it is again. It's probably going to bounce again. And you buy it here in the 70s, and it looks like it formed a bottom, and then over the weekend you find out that it's worthless. That's the risk with these big banks. So I see a lot of people like, and again, Andrew watched the video that he did, where he was dip buying FRC. And this thing is up another 55% even after Andrew sold and, made a little over 1,000 small dollar positions. FRC is just one of them. I mean, you have bigger banks and brokers like Schwab, which have bounced. You just can't risk losing everything. And these banks can just collapse out of the blue. Like, you don't know which ones are solid. You don't know which ones are solid and which ones are near bust. So some people will say, Tim, well, that's trading. You got to risk it. I don't agree. I don't think you do need to risk it. When you have a small account, understand, if you have a big account, you can afford to take some risks, have a small position. But what I want to teach you, through my trades like this, is that you can really tone down your risk levels and your stress levels, and take, just small gains that do add up while really focusing on protecting and preserving your capital. And 99% of my students are just beginning small accounts, and I really would like to teach you safety first. You can get aggressive, later on. So let's talk about GTII first. GTII, by the way, I did not have to cut losses, as it turns out. I had this one over the weekend. Let me actually just do a 1 minute chart. Nice little breakout here, right? Like, it was the key level that it couldn't break out was 180-ish. You can see here a nice little top, 180, 185. But I bought it into the close because, I thought that it was a breakout. They had the news where they're, going after the illegal shorts today. Like, they sued, I don't know, the market makers, conspiracy theories, whatever. Let them sue it. Let them get angry. They also said like a little dividend for their investors, which is funny. But the point is that it's a nice little breakout. It's not the most volatile play. I had it over the weekend because it was technically a breakout. I cut losses near the open just because I was scared. The entire market was dropping, very hard. We were down like, 1.5% near the open, and everything was just, falling out of the sky. As it turned out, I played it overly safe, taking a small loss. Didn't have to. I think I sold near the day low on Monday. Not right at the day lows, but pretty much at the day lows. The day low was like 178. I sold in the 181s. I just wasn't sure. And again, when you're not sure, you can cut losses. As it turns out, look at it. Huge uptrend, not huge, but like solid uptrend, solid breakout. I played overly safe. But again, I'm thinking safety first. GDVM, same kind of thing, where this is where you can really use your small account to your advantage. And this is what I love teaching, because people don't realize that when you have a small account, you can do amazing things. Everyone always wants big accounts, big money, but I love these kinds of little trades that big accounts don't do, can't do, shouldn't do. GDVM, big panic near the open, but it was not a going out of business type panic. If you watch the price action, I even alerted it in chat, and we've seen this price action before with this big dip. You're always fearful of a big dip like this, a big panic like this. But if you were watching the price action today, this morning, it was really just one seller. Like right now, it's 663 by 679. So, the spread is what, like 0.2 of a penny. When I was buying it in the low sixes, there was legit just one seller, and the spread was like 7.2 on the ask, and the bid was like 6.1. So it was over a penny a share, and whoever was selling, they were just selling into the bid. And obviously, there's always the risk that there can be more selling, but there was a lot of buyers, big bidders at 6 and 6.1. So, I only got a partial fill, roughly 60,000 shares. I was trying to get 100,000 shares. And if I had gotten 100,000, I probably would have put in another 100,000 order, because there was just so much support at 6. And like I said, it wasn't like the ask was at 6.2 or 6.3. It was purely one person or one market maker or one broker selling into the bid. And it was crazy how obvious it was if you were watching level 2. So there's no risk of this company going out of business. The only risk is that if there's going to be more block sellers. Again, why does this happen with GDVM? Why do I love OTC plays? Because a lot of these plays You should know the history of GDVM. It's not just a random stock. It's been uptrending for quite a while. This whole run-up is manipulated. It was promoted. I guarantee you that they're giving out restricted shares to insiders, to consultants. When it has the big crash, it's because those insiders or consultants are cashing in. The restricted shares are becoming unrestricted. So that creates, these panics. And you can see here there's a panic, nothing huge, but a little bounce here. This panic dropped from 13 down to the 4s, and it bounced up to the 8s. This doesn't look like much, but there was a 100% bounce. Today, not the biggest panic, not the biggest bounce, but very easy for me to capitalize. It really wasn't a question if I was going to lose money. It was more of a question, how big of a position could I get? How many shares? And then, I could sell it 6.8, 6.9. I think the bid even got up to 7 for a little bit. Right now, let's say I'm filming this an hour after the market opened. Even now, if I was still holding, I could sell it at 6.6, solid, 10% gain. This is not the most exciting trade, okay? The whole trading industry would look down on stocks like this. They'll look down on position sizes like this. They'll look down on trades like this. And yet, this kind of, goal, right, where I say my goal is 5 to 15% bounce and I hit the mid-range 10%. This can happen again and again and again and again. Let me just show you a blog post. I'll link it in the comments below. This is a blog post. I don't even know. I mean, we update it, but this is like a decade old. Same kind of, panic here on ZPAS. So many plays. Same kind of panic here. Same kind of panic here. Same kind of panic here. These are all, highly pumped stocks that have these giant panics near the open. And, some panics are better. Like this panic is not the most exciting. But when you can clearly see that it's one or two people and you understand how these promoters work and how these, restricted shares become unrestricted and they just sell near the open. You have to understand, like people ask, why are they selling on the bid here at like 6.1? They sold probably 500,000 shares, maybe 1 million shares. I don't even know. It was quick. Why are they selling at the bid here at 6.1 or 6.2 instead of taking their time and trying to sell it at 7 or like 6.7? Because they literally didn't pay anything for it. These consultants, these promoters, these third-party shareholders, they're just getting compensated in shares. They don't care whether they sell it at 7 or 6.7 or 6.1. It's all free money to them. And that opens the door to trading profits like this. Because I do care whether it's at 6.1 or 7. That opens the door to anybody who recognizes this opportunity. You don't have to try to dip by a bank where, much bigger banks, much more liquidity, much more profit potential, but you don't know if the bank is going to survive or not. There's always the risk that you're in it and it gets halted. The longer you're in any of these stocks like, FRC, which again, it looks like the fear is over. It looks like it's okay, but you just don't know. You risk losing everything or almost everything trying to catch a falling knife with these banks that can collapse. SIVB had 200 billion in assets. Some people say, oh, it's safe. These are giant companies. Penny stocks are terrible. SIVB collapsed in 48 hours and they had 200 billion in assets. Okay? No company is safe from collapsing. No trade that you do is completely safe from it being halted and you losing everything. But again, if you have a small account, you can take advantage of trades like this. I could not buy, 600,000 shares or 1 million shares and really make, thousands or tens of thousands, which still is small on Wall Street. Like, you have to understand how much money Wall Street is. Like, even 200 billion, which sounds huge to the normal person, that's not even one of the top 5 or top 10 banks in the nation. GDVM, like all these penny stocks, like the whole world looks at this as a joke, and I love it, right? Like I really enjoy the fact that big traders, big banks, most people look down on penny stocks because there is so much easy money trading stuff like this. And again, it's not huge money. None of my millionaire students became millionaires because of trades like this. but trades like this did help them build their account in the beginning, and it helps you understand the inefficiencies and the edge that you can have. Then you can take bigger positions. You can move on to bigger things like, I'm just your training wheels. I'm your kindergarten teacher. The kindergarten teacher does not teach, geometry or trigonometry. That's much later on. But if you can master trades like this, which, is basically my destiny. This is what I'm really good at. You can probably even tell, like, I'm really happy. I'm pumped. And some people will be like, Tim, you've been trading for 2 decades and you're pumped about a $400 profit? Yes. Yes. Because while the whole world and all of Wall Street and all of finance looks down on penny stocks and looks down on small trades like this, I know that 90% of traders lose. I know how many people with small accounts try to take big account strategies and they wonder why they're not growing their small account. They wonder why they're so confused. They wonder why they're so stressed. This is so very simple. And again, I still lose 1/3 of the time. This isn't like foolproof, but the odds are so much better with trades like this because it's purely just due to the promoters, due to restricted shares becoming unrestricted. It's a very simple game, okay? And again, very small money, very quick. Some people are like, Tim, like by the time you even alerted, it had already bounced. Correct, okay? This is why I don't want you following anybody's alerts because these things move so quickly. But I do want to show you the process. And I do want to show you how this stuff happens again and again and again. So read this blog post. I'll link it below this video. I'll include, Andrew's video too. He's a great upcoming challenge student, over 100,000 in profits, just made 1,000 a day. But whether you make low stress trades like this where you make a few hundred, or higher stress, higher risk trades like Andrew where he makes 1,000, this is how you grow your account, okay? And I am very proud to teach this stuff because no one else seems to want to deal with people with small accounts because they have the most questions and they're the most annoying and you can't really make money off them. That's why Wall Street doesn't care about you guys with small accounts. People are like, why doesn't Goldman Sachs care? Because you don't have any money. Okay. And frankly, most beginners, they just ask like the most annoying, similar questions over and over and over again. This is why I got started in teaching, because I was like, wait a minute, I have a strategy that really is ideal for people with small accounts. No one ever deals with anybody with small accounts. No one really cares. The people with small accounts usually just follow like stock promoters because they're like, hey, it's a free pick. I can make a lot of money. They don't realize how corrupt the promoters are. They follow chat rooms like Atlas Trading and a ton of other Discord chat rooms where everyone trades together, and it's very, very shady because guess what? A lot of these traders in Discord chat rooms have big accounts. So while you're happy to make a few $100s or a few $1,000s, guess what? The people with big accounts are using you to make tens or hundreds of thousands of dollars. This is why I don't like Discord chat rooms. This is why I don't like trading with others. This kind of trade, you don't need any chat room. You don't need anybody else. You don't need a lot of money. You just need understanding and you need education. And this stuff happens again and again. It can happen any single day. Today's not even like a very impressive day for GDVM. It's had better panics before. I was just ready near the open. That's all it comes down to. And I even alerted it in the chat room. I said, look at this GDVM panic. And it's so difficult to be stressed or to lose big on this. Again, I could have been wrong. There could have been another seller, could have taken it below 6, but I played the odds and I played a strategy that I know very well. And this is what happens. And if you can make this kind of trade, with small positions and make a few hundred or make a few thousand, or even, a smaller position, even if you just made $40. Remember, my millionaire students, if you look at all my 30+ millionaire students, along with my 2 8-figure students, they started by making $50 or $100. We have like an earnings disclaimer on my newsletters where it's like the average student makes $50, and we did all this math and people like rip on it. And they're like, oh, you only make $50. Correct. It's good to start small. And guess what? 90% of the industry loses. If you make anything at all, if you learn to make consistent profits, you're beating the vast majority of people out there. This game is so shady This industry is so pathetic, and I'm proud to cut through all the BS because small gains add up. You learn where the inefficiencies are, and then you can scale up and size up over time. So leave a comment if you understand that these kinds of trades can be, done with relatively low risk and relatively low stress. You just have to be prepared and you have to be quick. I'll see you in chat. Congrats to Andrew. Congrats to a lot of other students. Even with this market volatility, there are opportunities if you know where to look.